What if the future of money lies not in the tangible bills and notes and coins that we are accustomed to, but in the digital realm that's controlled by our central banks? Now, this could sound very well like a scene out of the Matrix movie, right? But as digitization of the economy accelerates, a majority of central banks across the world are exploring retail CBDCs or central bank digital currencies. And while CBDC projects do take time to come to fruition, I mean, just in India alone, we've been piloting our e-rupee since 2022. Central banks definitely need to have a vision for the structure of the monetary and the payment systems beyond just the medium term. And we're talking about a time horizon of at least 5 to 10 years. Even if the case for CBDCs as a solution to existing challenges may not currently be as compelling in some jurisdictions, they could become necessary as the economy gets more and more digitized. And not just the economy, even our lifestyles are getting digitized. I mean, who could have predicted the rise of something like cryptocurrencies like bitcoins even a decade ago? Exploring CBDCs is no small feat. I think it's a significant undertaking that involves complex decisions and considerations in a rapidly changing digital environment. Central banks have significant experience in operating their monetary systems, but CBDCs would entail breaking into a new ground altogether. Because here, central banks settle currency to the public, and they're using completely new technology that no one has really worked on before. It's like a literally uncharted territory where even the rules are yet to be written. Moreover, most central banks face some or the other form of resource constraints, and there's very little room for such a costly trial and error. And let's not forget that the inherent unpredictability of the future that most central banks need to navigate under. I mean, they already have to deal with the Impossible Trinity. Now, for those of you who are new, the Impossible Trinity is actually one of the core functions that a central bank has to manage, where they have to manage 3 legs which are always pulling each other in different directions. On one side, you have the free capital flow, the other side, you have independent monetary policy, and the third leg is a fixed exchange rate. Now, a nation cannot have free capital flow, independent monetary policy, and a fixed exchange rate simultaneously. They must choose one side of the triangle and completely give up the other. Like, for example, in the US, they have free capital flow and they have an independent monetary policy, but that means that they have no control over their exchange rates. Now, for the US, it works really well because honestly, they are the globes that reserve currency, so it doesn't really matter. But if you take the case of Hong Kong, they fixed their exchange, they pegged their exchange rates to the US and to China, and they have free capital flow. But that means that their monetary policy is heavily dependent on whatever the Chinese government does. They don't have an independent monetary policy. Or let's say China, for that, they have no control over the money that flows in and out of their currency. So this is like an impossible trinity, and on top of that, you're adding CBDCs. So CBDC should therefore be designed with certain caution in mind, and central banks should carefully assess how and whether it needs to be implemented. But the same uncertainty also calls for exploring it very proactively. There is a risk that central banks may find themselves unprepared in a future where, without a CBDC, they're unable to even complete their basic functioning. So it's a very delicate balance, much like, going on like a tightrope walk over here. And to address these challenges is exactly why we should have a structured framework around CBDCs, which is exactly what we shall be discussing in today's episode of the FinTech Chronicle. So welcome to everyone who's joining us through the LinkedIn audio room, as well as everyone who's watching the replay on YouTube. I'm your host, Kamalika, and today we are discussing a bunch of papers which the IMF, or the International Monetary Fund, and BIS, or Bank for International Settlement, have authored. And this is all about the design implications and considerations of CBDCs. But before we jump right in, I would just want to say that this is a community podcast. So at any point in time, if you feel like you have a differing opinion or you just want to add clarifications to what I'm saying, please feel free, if you're in the LinkedIn audio room, to just raise your hand and come up on stage. I will definitely pull you up and we'll have a great discussion. And I thoroughly enjoy every discussion that all of us have in this community, because every time you guys, challenge my ideas or ask me a question, it really makes me pause and think a lot more deeply about the conversation. So yes, with that said, let's jump right in. By the way, I hope all of you do know how to raise your hand and come up on stage. It is at the bottom right corner of your screen. Once you raise your hand, I will be able to pull you up on stage. And once you're on stage, you will have to unmute yourself. There's a mic option that comes up over there, and then kind of raise your questions over there. And I would urge all of you to give at least one line of an introduction about yourself before diving super introduction. On one hand, we have the policy management, and on the other hand is the product management. From the IMF paper, they've drawn out this very beautiful sort of a roadmap for the CBDC process, where they've broken the entire thing down into what they call the 5P process. What do 5P stand for? Preparation, POC or proof of concept, prototyping, pilot, and production. So these are like, the 5 stages of the entire product development lifecycle. And the policy concerns that are there, the reviewing of existing payment systems and alternative solutions, understanding user needs, stakeholder management and engagement, assessing the risk, doing a capacity planning for the central banks, figuring out the design elements that are going to go into the CBDC wallets, the regulatory compliance and financial legal integrity of things, and all of those have come into the first part, or the first P of the entire conversation over here. Then of course you have a lot of these architectural discussions that have to happen, the technical implementations which come into the POC part. The build also includes a lot of these, as well as on-the-fly risk mitigation that has to happen, followed by, and it's not really a waterfall model, so you will have a lot more stakeholder engagement, risk analysis, capacity readiness across each of these stages, wherein every stage you have to sign off with a go, no-go sort of a approach. So that's kind of what the recommendation that IMF had given over here. And by the way, I will be sharing the links to all of these. Oh, actually, these are PDF documents, so I'll probably upload all of it and share it into a Google Drive sometimes. But yes, because each phase goes through several iterations, the go or the no-go process will also be like a kind of an opportunity to course correct when necessary. And this is what we see with iterative project management, which enables to adapt to new data or unforeseen events as well, which is benefits and recommended. We have that iterative process rather than a very top-down forced approach that a lot of traditional products or internet-based applications were initially developed. Anyways, in case of CBDC project development, the important factors that affect the go-no-go could also be external driven. And in this case, IMF had detailed out a very beautiful sort of a case study of Israel's central bank, where Israel's central bank had listed down potential scenarios wherein their central bank could decide to not issue a central bank digital currency. Let's actually discuss the reasons that they would be compelled to get into the digital shekel. The first one was that all other countries that they have a trade relationship with start issuing CBDCs and start using CBDCs predominantly. So that would be one major external reason that forces them to also start adapting and issuing CBDCs over there. The next is that the legitimate use of cash and the acceptance of legitimate cash in legitimate transactions starts declining rapidly in Israel. And while cash to date is a widely accepted means of payment, as we move more and more towards the digital world, digital life cycle that all of us have, the ability to make cash-based transactions will also start declining, right? So that could be another external factor. The third external factor could be that there is a huge acceptance of private currencies like Bitcoin or other stable coins as well. The fourth reason would be that there is the competition in the domestic payment ecosystem itself starts diminishing, and there's concentration of market risks in certain pockets of the domestic payment systems. The fifth consideration could be technological developments. It may just turn out that there is significant technological advancements that justify building out a digital shekel. So these kind of external things that need to be discussed in the preparation phase, no-go decision. I kind of really like that. But coming on to some of the other policies that could possibly hamper or I wouldn't really say hamper, but really could be like a motivation for building a proof of why we need to be having this. So on this, they said the recommendation that IMF had is that to inform every subsequent phase on both why this project is going on and how they're planning to continue with this. So this has both the design choices as well as the policy and the regulatory and privacy issues that are compelled into this. So central banks should parallelly start considering the technological options that are available, as well as the legal and the design challenges for the users as well. And central bank's decision-making process would, in this phase especially, be both short-term as well as long-term. So there may not be really very compelling short-term motivations as of today to develop a CBDC, but there could be very good future-proofing reasons for issuing a CBDC. And for this, here they've discussed the motivations that UK has around building their digital pound. First and foremost, so as a lot of you would already know, UK is still known as the financial capital of the world. And they mentioned that with technological advances, for them to stay relevant as the financial capital of the world, they will need to start being one of the forerunners of the entire digital currency conversation. The next thing is, of course, to sustain the access. As a result of being the financial capital of the world, they need to sustain access to UK central bank currency as well. And not just a currency, they should also be an anchor for confidence and safety in monetary systems. It's kind of crucial for financial stability and for financial sovereignty over there. The next thing is about having payment mechanisms that are innovative, efficient, secure, and in line with the lifestyle and economic changes that are happening thanks to ever-growing digitalization. Now, this contrasting case of CBDCs could safeguard the ability for individuals to make payments and overcome challenges that currently merchants face with unwillingness to accept other payment mechanisms, or even cash for that matter. And CBDCs should specifically be designed to address these issues, even if there is potentially in most of the in most of the smaller nations where this may just become a little too expensive for them to manage, aside from all of the various initiatives that they're running around bringing people out of poverty levels. It could also help lower those barriers for financial inclusion in these underdeveloped countries. Now, one question is, of course, there is low penetration of financial products over there. So can a CBDC help? Again, that's an intrinsic motivation for a lot of these central banks over there. I'm going to take a quick pause and welcome on stage my very good friend Swati Kiran. Hi Swati, and Shubham, we will come to you right after we talk to Swati. Hi Swati.
for creators so that we can, the creator economy is moving. So I wanted to collab with creators and build something for them on a bigger scale. And along with that, I'm also working with some chartered brands.
Wow, that's amazing.
Yeah, so I'm working with 3 chartered.
Okay, so this again goes back to, what IMF was talking about, intrinsic as well as external motivation for your policy decisions around CBDC. I think when it comes within India, if you're talking about financial inclusion, or if you're talking about digitizing payments, or if you're talking about real-time account-to-account transfers, India has covered all of those in the last 10 years. So when it comes to financial inclusion, the Jan Dhan accounts have done a really great job of making sure that, 90% of our, I think it's 89, not exactly 90, but yes, a large chunk of our population at least has access to banking services. Jan Dhan has done that. When it comes to real-time account-to-account transfers, payments that are done, UPI is the only other competitor globally for UPI is Brazil's Pix, and nothing else comes close to it. But when it comes to issues of, say, real-time business-to-business payments, or even say real-time government-to-business and business-to-government payments, we have been lacking over there. Can a CBDC solve for it? I definitely think so. So there are pockets of use cases in India itself that I think should be solved for. If you have programmable money, like what CBDC promises to be, it just means that in India, if you see a lot of these small manufacturers run a huge deficit on their balance sheets, simply because they sell out to their major buyers in credit. So typically a credit cycle of 45-60 days, whereas they pay their suppliers in advance. So they run a huge deficit over there, and if there is a way for them to bridge that working capital loan thanks to CBDCs, which are milestones, then it becomes a lot more easy for them to manage their cash flows. So definitely in India, I think that's a huge use case. That's why our entire focus in India has been on the entire wholesale CBDC payment systems over there. The other potential benefit that I see for CBDC in India is for cross-border payments. And on cross-border payments, this would involve us possibly linking with the domestic CBDCs of other countries, for which again, BIS has this amazing new project called Project Enbridge. I've not gotten into details of it, but basically it's about interconnecting all the different CBDCs that are there. It will be on top of the entire internet, which we discussed a few weeks back. But yes, so these are 2 elements where I see a lot of potential for CBDC. But on the retail side, which is also possibly why the adoption has been so low, it's because we've covered the basics of financial inclusion and access to real-time payment account-to-account systems, which are super cheap, by the way. So yeah, did that answer your question, sir? All right, with that, let's get back to the product management or the product development of CBDC. And for this, I'm going to be kind of delving into the 5P model that's been recommended by IMF, simply because this methodology I kind of found it, like I said, it was an agile Scrum process, every product manager's dream come true. But apart from that, I think they've put in a lot of design considerations into each of these stages, especially in building out a prioritization matrix also for central banks over here. So what is the 5P method? Now, the 5P method basically has 5 stages. The preparation phase, which is very vital for the groundwork in identifying the key questions that the CBDC should be solving for. Like, for example, what Swati Kiran asked us, what will be the use case of CBDCs 5 years down the line? So that is what the preparation phase is going to be all about. Apologies. Yes. So in the preparation phase itself, brief exploration of the technology capabilities that are there and the use cases should also be discussed. Next, we have the proof of concept phase, which is to validate or invalidate some of the assumptions around what the CBDC should be doing. Some of the conditions for success, the success metrics that most of our product managers love to use, policy objectives, the user stories that we're going to be building out here, the viability of technology and the maturity of technology for implementing these user stories, and questions around whether we already have the legal, regulatory, financial guardrails for this. Then we come to the third phase, which is the prototyping phase, which is basically the development of CBDC solution, or at least, if not the whole thing, some very vital use cases that we've identified from the above 2 steps. This phase will be about transferring the knowledge provided in the previous 2 phases, which was all about the policy and the frameworks around it, and allow people and kind of open it up to the public or with requests to proposals. And this will also help making sure that whoever the central bank onboard is a tested partner, they have the best proof of concept or an idea for how the CBDC should function, and have the technological know as well. I think that goes without saying. The fourth thing should be the speed to execute. Sorry, how did I forget that? Yeah. Then it switches the pilot for most of the very vital use cases that are critical for this. Now, this is where, currently I would say this is the CBDCs needs like a go live or at a massive stage. And this will include, for example, right now in India, we have 5 banks that have the CBDC wallets enabled on them. So it will include targeted user segments, the intermediaries through whom we'll be going through for this, a few select merchant outlets where this can be tested, and all of this is so that it's enough if any failure does have environment. And the focus of this phase is typically about ensuring security, scalability, making sure that there is a disaster recovery management system in place. The systems are resilient basically to any untoward risk that customers have today with UPI. Is that UPI transaction dispute? And I've still not heard back. I had to follow up vigorously with my bank and there's still no closure on it. So making sure that we have all of these elements in place before the actual production phase of it becomes very vital. So I like this entire approach of how they've codified, the product development process for CBDCs, and definitely something that all of us should be exploring. By the way, if you all are interested in a much more detailed, granular look at CBDC's product management cycle, I would highly urge all of you to read this technical paper by M2P FinTech on implementation of CBDC. It kind of mentions a lot of other aspects of it as well, on the security, on some of the encryption algorithms, the storage algorithms, and all of those as well. But that said, now we come to a very interesting part of the conversation, which is about the privacy concerns around CBDC. And this is going to be the last section of this entire conversation. Now, one of the biggest pitfalls of CBDC is that what most people think is that this is giving too much of power into the hands of our central bankers. And while 10 years ago, most of us might have been blind to the potential pitfalls of privacy concerns over here, today, we're all very cautious about oversharing any personal information online. And with good reason, right? Because for many people, it's resulted in their identities being stolen, money being stolen, and being subjected to a lot of harassment because of all of these frauds as well. So what are some of the concerns or safeguards around privacy that CBDCs should look into? And here is where, so in last year's World Economic Forum, there was this very interesting paper which was submitted by, I think it was the WEF consortium itself. Unfortunately. Anyways, so coming to some of the recommendations that this paper had, the first one was on embedding cryptography into the CBDC journey. Now, no bank in general wants to use a system that poses any privacy or confidentiality concerns. And the same should be applicable to the same kind of privacy concerns that we are putting to, say, a credit card transaction, a debit card transaction, or a net banking transaction. The same set of rules should also apply to a CBDC. So the same level of cryptography methods that we're using, the coding algorithms, the hash algorithms that we're using to code these data and store these data should also be adopted for CBDC. Then the other thing was on the user experience and the accessibility of it. Now, focusing on user experience is to make sure that CBDCs are intuitive and easy to understand for all users to use. So the design should be very user-friendly. The interface should not be monotonous like what RBI sites are known to be, and also address potential barriers to adoption, such as, one is of course digital financial literacy. The second more important thing is localizing it in the language of your user's preference over here. The other, and they had a bunch of other interesting ways of ensuring, are we oversharing too much of our personal information through CBDCs? And here, one of the recommendations that WEF had done was that all transaction or account related information that is shared from any entity to another entity should include zero knowledge proofs. Now, zero knowledge proofs is a very complicated sort of a concept that's there in the blockchain industry, which basically says that if I have 100 rupees in my account, without me showing you my account ledger, can I prove to you that I do indeed have 100 rupees in my account? So you are basically legitimizing any transaction. So let's say that, my good friend Abhishek is down there in the audience. So let's say that, I've taken some financial advice from Abhishek, for which I need to pay him 1,000 rupees. And before Abhishek gets into a consulting call with me, how does he know that Kamalika has the ability to pay that 1,000 rupees at the end of the call? Zero knowledge proof. I shared that algorithm with him where he can verify that, okay, my fees is 1,000 rupees, privacy concern, and for coding in, I would say, a lot of our smart contracts with zero knowledge proofs. So you're able to figure out the ability and the willingness of customers to pay that money without really revealing any much of their personal information at all. Then, of course, they have the standard hashing algorithm and the two-factor authentication, which we, by the way, in India kind of use very diligently. A lot of conversations around how data storage should be. So when you see the card, and they've taken inspiration from how information is stored in typical merchant transaction across the world, where tokenization of data is very important over there. And they also quoted number where a merchant had said that, all of their transactional data, all of their card detail is tokenized. The end consumer's trust became a lot more. So for something as cryptocurrencies or stable coins, on the way that they ensure a user is who they say they are without really collecting too much of information. So that was also a very interesting point over there. So that's about all that I had. Are there any questions? Just taking a quick pause to see if there are any more questions at this point in time. All right. If that's all, then I would just love to conclude this room because I've had a great time reading all of these papers and going through and understanding the nuances and technicalities of it. We do have Ratish Dash. Hi, Ratish. Good to see you back again. How are you doing?
I'm doing very good. How are you doing today?
I'm great, Ratish. Please, for the benefit of everyone else, do give us a brief introduction and go ahead.
Alright, so I have all optional loan. I take care of few of the, I'm working account manager for pay payments, which is into, digital payment experience. So that's about me. And
just to clarify,
definitely with the payment rails, which is currently available, and also all the international things, all the similar CBDCs.
Okay, got it. Okay, so on interoperability of CBDC with existing payment modes, if it is something like interoperability of CBDC with UPI, where both the entities the central entity that's, managing UPI and the central entity that's responsible for rolling out CBDC happens to be NPCI in this case. So there it becomes easy. But what about if I want to make CBDC interoperable with my credit card transactions or my debit card transactions? Now this is where, and honestly, this has actually given me an idea for a concept note of my own, because while in silos, Visa is working with BIS, MasterCard is working with IMF and SWIFT and all of those, I don't think we have an overarching way to kind of bring all of these different payment modes under one umbrella over there. So this is actually Rakesh, I would love to kind of take you up of CBDC between different countries. CBDC, there are a bunch of very interesting projects that are going on. I think BIS's Enrich is one such project, but even if you see, Bank of Thailand has been signing a lot of these MOUs with various different countries to build bridges between the different countries and make their currency notes and currencies, digital currencies that are there. While this is happening in silo, there is a proposal from, again, BIS, which is known as Printernet, for bringing all of this into one umbrella over there again. And Printernet is not just about currency, digital currencies, it's about any real world asset that can be tokenized either by any central agency of that particular country. Was I able to do justice to the question, Ratish?
Yes, I think this got me some understanding. I should also do some research on it.
But yes, I'm definitely going to ping you personally after this, and we should connect on. Sure. All right, we have Akshay with us, and super excited to have you with us, Akshay. Please, I know you, but I would love for you to kind of introduce yourself and just let everyone else know about you as well. Akshay, do we have you? We will quickly circle back to Akshay because I would love to hear from him, because he is someone who's been at the crux of a lot of very interesting fintech developments that have been happening in India. Meanwhile, we have Anuj with us, who happens to be a blockchain expert, and a lot of CBDCs that's being implemented today is on the blockchain. So, Anuj, over to you.
Hello, hi everyone. So, I'm digging into CBDC since 2021, when this to only central banks, CBDC should be one of the ecosystem that will resolve the cross-border payments. Yeah. That was the priority, and the priority interoperability. So, when it comes to interoperability, I don't believe that it should be interoperability with three techs. For example, integrating RBI CBDC with other blockchains.
Yeah.
And in that case, if you have more knowledge about it, so recently, last month, RBI announced about CBDC programmability.
Yeah.
Do you have like any information, or did you write any paper about it? Or any concept that you have? So I just want to know more about it, because I have very limited information on the internet. Only one that as of now used in the same bank.
Yep.
That tokenized some carbon credits for the farmers and muted.
Yeah.
So do you have more information around it?
Unfortunately, Anuj, I think you are better positioned than I am to kind of know about this. What I do know is some of the publications that RBI has published where, and honestly, a lot of them are very amazing concept notes. In fact, if I am remembering correctly, there was a paper by Dr. Paritosh Basu where he had a very futuristic sort of a program where on the blockchain, where you have weather data coming in, you have digital currencies, so you have like rebates on various farm loans, etc., all of those come feeding into one ecosystem, which I'm not remembering the name of the project. I will honestly have to look that up, but I'll share that with you. But Anuj, question to you, because you raised a very interesting point over here, which is that CBDC should be interoperable with other technologies and not just other currencies. And I love that concept. But do you think, given, how anti-stablecoin and anti-private currency that WEF has been, or the World Economic Forum has been, central agencies have been, do you think we're going to see like an interoperability between, say, an e-rupee, an e-CNY, and a stablecoin or something like that, Anuj?
Yeah, I believe so, because it is what the development happening is in Hong Kong. It's very different from India. So we have a narrative out of India. When it comes to interoperability, I think this programmability bit of CBDC will come in future. So for example, the CBDC could be one of the medium you can launch your own stable coins. So tokens and stable coins on top of CBDC layer.
Wow.
So this is something that is going to be very critical, I believe. And here will come the interoperability, right? And you will be coming up with the CBDC that is again on RBI's ledger, not any particular bank's ledger. So that banks are like kind of forced to launch their CBDC wallet. They are not anything now. So what I believe, the main use case will come in the picture once we start getting tokenized things on top of CBDC and tokens and stablecoins. So I believe that things will be changing after a while. You have a clear picture around CBDC programmability. You can create your customized use case using CBDC. So I can share something that I am digging into right now. I literally hope on this call because of that you were talking about CBDC and privacy concerns. And you also mentioned about the zero knowledge proof. Yeah. That's great. Good concept altogether. But I'm way deeper into this. So I just do not want to confuse everyone here.
No, but I really love that perspective. And Anuj, I may just, kind of ping you and pick your brains on it as well. Because a lot of this is still kind of hazy to me, especially when we're talking about a hybrid implementation of CBDC. But yes, I would love to take that conversation offline. Thank you so much for that, Anuj.
Yes. So yeah, when it comes to wallet, you're talking about particularly CBDC wallet that we are. So obviously the banks are not holding any CBDC as such. Like if you're doing transaction, that's your CBDC and are not in control of any banks. right? So that's the one particular thing. That's why I said that banks are like they don't like CBDC as it doesn't add any value to their books,
Yeah.
right? So that's something that I am working on, and that's why the CBDC. Obviously, if you will do a peer-to-peer transaction, why would you go to CBDC, right? India is there,
Yeah.
so India is advancing in that. You already mentioned about it that okay, we already good at it when it comes to doing transaction and making Indian population more financially literate and financially around how to make transactions and do digital payments. But here, picture is a bit different across globe. The USBDC also, if there would be some sort of value addition to their books, why wouldn't every other banks creating their own CBDC wallet? So obviously, maybe are they providing them some funding, right? Some grants for building these CBDC wallets. So this is what my understanding, but I don't know. Like obviously, this thing is not in public because again, coming from the regulators, how they're operating throughout the pilot. But yeah, this is my.
Also, another thing, Anish, that I would want to add here is that I think CBDC wallets that have been given out there is basically just a stopgap way that RBI has done it, because for RBI to control or manage, not control, manage the monetary policy in the country, they today still need banks. So removing bank as an intermediary altogether will actually be detrimental to the RBI. And I feel like,
So for example, if they will launch a separate CBDC wallet, like standalone, just for RBI's CBDC wallet, so for them it would be very difficult to onboard again all these users. So it would be a lengthy process. So I think that's why they are going with these banks. For example, if some fintech company come up with some wallet, right, and they have more people onboarded, right, and they have more people onboarded, and then start doing businesses through CBDC, they would love to have them as a partner as per their requirements.
yeah, true. All right, I will just be circling back to Akshar again to see if he is available and back with us on stage. Akshar, do we still have you with us? If you are, then please do unmic yourself. I think the mic option is there right at the bottom right corner for you. If not, very unfortunate that we could not have Akshar joining us, but that would be a wrap of today's FinTech Chronicler episode. I'm so glad that I got to learn so much from everyone who joined us today on stage. And once again, thank you all for joining me. We will be back again next week with yet another episode. Till then, stay safe, stay well. Bye.